Welcome to the Broken Pie Chart Podcast, episode 378. I'm your host, Derek Moore. With me once again is Shane Skinner. Mike Snyder is on assignment. He's not really, but it sounds cool. All right. I'm going to tell you something, dude. It's this reminds me of the 90s, and I'll tell you why. In the late 1990s, there were all these IPOs. And, you know, I'm not bearing the lead with SpaceX. But there were all these IPOs in the 90s. And at the time, I was on a Schwab trading team or managing a trading team. I forget what year all this was. And I mean, all these companies came public. And when companies came public, everybody wanted shares. And at one point, I remember Schwab was part of the selling group. And so they would get some allotment. But everybody would be just, hey, how can I get shares? How can I get shares? And I used to tell people, if you can get shares, you don't want them. And if you want the shares, you're likely not to get them, meaning demand outstrips the supply. I got to be honest with you. Between me and one of the other advisors here at Zega, we got, I think, 5 or 6 inquiries already. Hey, I heard Schwab is part of the selling group. Now we have we custody at Schwab, also, Fidelity and some other firms, right? But so it's happening again. And a lot of people are like, hey, how can I get some SpaceX shares? So this reminds me of the 90s. And when I think about, and I told somebody, I said, do you think I can get 1,000 shares? I said, it's not really likely. I have no idea. I have no idea the size of the allocation, who's part of the selling group gets what. I think Goldman's the lead underwriter from what I understand. But they released their S-1, Shane, and this is exciting because you get to see their revenue and their earnings. So revenue for 2025, year ended December 31st, $18.6 billion in revenue. 2024, $14 billion. 2023, $10.3 billion. And if I look at income from operations, or let me just do net income, actually. Net income looks like they lost $4.9 billion in 25. They made $791 million in 24, and they lost $4.6 billion. So if you're thinking about this on a basic net income gain or loss per share, like EPS, they lost $1.69 a share in 25, made a penny in 24, lost $1.68. So, Shane, what is the projected size of the IPO?
Is it
$1 trillion, $2 trillion? I guess
something like up there between 1 to 2. I think I want to say 1.7 off the top of my head. Let me double check.
And the reason why I asked that is, look, people are buying this, or people are interested in the future potential. So you look at something like this, and I have no idea what the price of SpaceX is going to do. I can tell you Facebook, one of our other advisors today reminded me of, Facebook when it came out, it was a big IPO. It went down, and I remember people were mad about it. I think they got sued because people said they were, not informed properly. I don't even know. Don't even remember what it was. And then if they just would have held the stock, of course, it went up and up and up after that, which was interesting. So, did you find the prospective size?
Yeah, roughly 1.25 trillion, 1.25 trillion in February. This is according to CNBC. After merging with XAI in February, so that's sort of the most recent, I guess, general number. But yeah, the other thing is that's a very forward-looking number. That's not something that is based in what they're doing exactly in this moment. And, I think that, what do you think? With this being Elon and it's Tesla, right, 2.0 almost in a way, he's got this behemoth of a company in SpaceX, and everybody's going to say, hey, these are insane valuations on paper with what they're doing in revenue relative to what they're looking in valuation in this IPO. And at the same time, who knows, right? And it took Tesla a while to take off, and eventually it has. And who knows where Tesla will be in 5 to 10 years, right? Let alone 1 year. But
I'll give you a little context here. And neither of us are making any sort of predictions on SpaceX. I think people are going to buy it because it's highly, the amount of interest that I'm hearing just from retail investors, from clients, from advisors who speak to clients. But let me give you some context here. If we take, what do we say their revenue was? What did I just say it was? 18 points. Let's just say 18 billion. If they come out in an IPO and the size is 1.7 trillion, that is about 94, 95 times their revenue.
Right.
Nvidia is let me just see the estimated. It's probably like 22 times, trading at 22 times revenue.
What's Tesla? Do you know? Or could you find?
I can look it up real quick. Yeah, Tesla price to sales. Let me see. I'll look at Bloomberg too on this. It trades about 15-ish times.
15. Interesting. That's a lot less than I would have expected.
So, if the market cap is 1.7 trillion, we'll see. Let me give you some other data here on what I read the S1. So the S1 is like Christmas for people who are market geeks like us, because it's the first chance you get to see what their revenue is, what their net income is, other data. I will tell you, S1s these days, a lot of graphics, a lot of pictures of space and rocket ships. It's pretty cool. If you Google S-1 SpaceX, it's listed on Edgar, which is the SEC site. So yeah, the revenue, okay, 18.7 billion. Well, we talked about the net loss. And if you look at the segment breakdown, Starlink and connectivity was about 11.4 billion in revenue. Space and launch services, 4.1. AI was about 3.2. So we said, on trailing 12 months or last year, it's they had negative EPS. Okay. So then I started to look at, a lot of times there's lockup periods. And what does that mean? That means, Shane, let's say you and I were employees of SpaceX and we had shares, or we were very early investors, whatever. We are not, to be clear. But let's say we were. Well, when there's an IPO, they don't want everybody to just liquidate on day one. And so sometimes they'll write in these lockup provisions. And it's a certain number of days, and after which you can sell. There's some people who say, don't buy at the IPO, wait for the lockup period to end, and then everyone who needs liquidity and sells will maybe cause the price to go down, and then you buy in. That's one theory. I'll let you know whether it's good or bad in a couple of months. According to, and I think I had this right, the standard lockup is actually 180 days. So that's 6 months for most pre-IPO holders, people who held shares before the IPO. It looks like Musk and some large insiders, their lockup is a full year, so they can't sell. And then according to what I found online, and I think this is MarketWatch had an article, up to 20% of the eligible shares may unlock shortly after first earnings release. Additional 10% may unlock if certain stock price milestones are hit. I didn't bother to look those up. So it looks like 180 days. So let's say this comes out in June, some point, you're looking at December. If this is true from what I'm reading from my research, 180 days. So, and there's also staggered structures. So there's some people who looks like they'll be able to get out sooner. So I bring this up because that is really, really interesting. My understanding too, Shane, is that this will go into the Qs, the NDX 100 index. That's that's been reported. The S&P usually, to get listed on, be included in the S&P 500 index, you have to have positive earnings for, a number of periods. So, if I look this up, and I know there's been some rumors about they might change things, but the sum of the previous 4 quarters of earnings must be positive. I think that's generally their thing.
Isn't there a restriction on time too? Don't you have to be listed for like 12 months before you can join the S&P?
No, I think that's one of it too, where I believe the Nasdaq.
I think it's 3 months on the Qs if I'm reading this correctly. This is some quick Google,
maybe,
right?
yeah.
I mean, the Nasdaq Global 100 Index. So I think after 3 months they can go into the Qs, but SPY wouldn't. It'd be till 12 months, it looks like.
Yeah, unless they sort of change the guidelines. I mean, there's a board that actually picks companies, which is a whole fascinating thing anyway. Who to bring in, who to come out.
And that's not to say it can't be added to other ETFs, right? Like just because it's not necessarily immediate. Like, and you better believe it. It probably will find its way into them. So, I mean, yeah, I think these are all valid points about the IPO you bring up in the sense that, like it's really hard to tell when a company comes out what they're going to do. And, it depends on the time frame you're looking at. And it's definitely worth being aware of the lockup periods and the times where not that it will necessarily cause the stock to go down or even create selling, but it's good to be aware when people that have large stakes can liquidate some. And like you said, sometimes people need money or want to take some off. And yeah.
For comparison, if I look, let me see if I can find this. So let me look at Amazon's. And the reason I said like S1s these days have tons of pictures and everything, they never used to have pictures. It was like pretty dry. It was just black and white text. And, they kind of just, it was what it was. What I'm looking for is I'm looking at Amazon's S1. And I really should just load this into one of the LLMs like ChatGPT and have it read it for me. But I'm trying to see if they had positive earnings coming into that. Hang on, give me a second. I'm gonna do this. I got the S1 link. Doing this live. Was their revenue and EPS? Okay, I have ChatGPT looking at this. Doing this live. Hang on. Yeah, I mean, the reason I bring up a little bit on, just this idea of lockup periods, also joining an index. Let's say this was put into the S&P 500. And if it's 1.7 trillion, that would put it, I mean, its weighting would be fairly robust. But remember, S&P 500 earnings and indexes in general, but just thinking about the S&P 500 here, it is aggregated. But when the ratios like price to sales on an aggregate basis of all the companies in the S&P 500 and the EPS, the earnings per share and all that stuff, like if you put a company that big that is, let's say they have positive earnings, but they're trading at a very high PE or a very high price to sales, like that would make that index a richer valuation, I guess I'm kind of saying. So yeah, I don't know. I think it's cool. And how long till we see Anthropic come out with their S1? You think that one's next or ChatGPT?
I don't know. So the thing that has me really interested, I'm not just paying attention to those, but I'm paying attention to Microsoft here, right? Because you have news today coming out that Anthropic's interested in buying something like up to $5 billion worth of some new Microsoft chips that they're coming out with. So, pump your brakes in the chip space for a second, right? Nvidia all of a sudden isn't the only one. It seems like some of these other hyperscalers might just say, you know what, forget it. I'm going to make my own chips and sidestep Nvidia. I actually think that's one of the biggest risks to Nvidia, period, is if there's some vertical integration into, these hyperscalers instead making their own chips. But you've got Anthropic that announces that, and then you've got OpenAI, which we know Microsoft sort of had this tie to and is heavily sort of invested or involved with. They just beat that lawsuit that Musk was essentially pushing on them moving from, being a non-for-profit, right? And now they are for-profit and likely going to IPO. Since that court case was shot down, we'll see if it gets escalated higher. If it does, that could prevent OpenAI, right, from IPOing sooner than I think they'd like. If it doesn't get raised up and the lawsuit's done, I think they'll go for it as well. But again, it's interesting because both simultaneously are sort of lining up in favor for Microsoft potentially here, which has been one of the dogs of the Mag 7 this year. So obviously, who knows what's going to happen, right? But
yeah, all right. I mean, look, I'm just interested to see these things come out. And there's some people who say, look, when all these hit and the growth expectation then becomes real because you actually see it and the market's got to absorb that, they're like, oh, that could be a little bit of a top. That's one school of thought. The other is we really haven't had it's not like the 90s and the 2000s where all these internet companies were coming out. So I did find 1997 was Amazon's S-1. Looks totally different. No pictures, no nothing, just text. Their revenue in 96 was 15.7 million. Net loss for 96, 5.8 million. And their EPS obviously was negative. Now their revenue growth in 95 was 838%. So yeah, I mean, they did 500, is that 500,000? Yeah, they did 500,000 in revenue in 95.
Wow.
And 15.7 million in 96. They come public and, they were trading at, let me see, if they're at IPO, market cap was roughly 438 million. So they were trading at 28 times sales. So would I just say, not Tesla, SpaceX would be 94 times?
Like 90 something, yeah.
Yeah, that's my dumb back of the envelope, math. So yeah.
It's interesting though. I mean, obviously this was probably more so associated with the dot-com bubble itself than Amazon, but didn't it fall something like 95% from its peak by 2001-ish, I think is what I'm seeing here. So it's like, you just never know. Like, you never know whether the company's good or not, when it's going to take off. Nvidia, right? Nvidia was a gaming company for the longest time. That's what everybody knew it for, was video games, right? Chips for that stuff. And then a crypto mining stuff. And now here we are. So it's,
well, and by the way, Amazon had negative revenue.
Yeah.
And SpaceX has, like, just because it has negative revenue, like a lot of companies, they're in growth mode, they're burning cash. So, ask me in a couple of years. All right. So I expect options to come out on this when SpaceX comes out. What do you think the implied volatility, the at the money implied volatility will be whenever SpaceX comes out? It's got to be at least 50, right?
I'm thinking whatever. I didn't do the math coming into this, but wherever it essentially IPOs from, I'm expecting a month out to be at least a 20% move being priced in, maybe 15. And I'm probably being generous. It might be closer to 10, but I'm with you. I think vol's at least going to be 50%. I would say that's probably the floor on this. Obviously, we'll see, but there's a lot of excitement, and part of it's because of Elon, right? He's just got this this thing about him that, the market seems to be very interested in what he is into, and the people that like him seem to be very interested in investing in what they can that is publicly available. So
I did look. This is the last one. I swear I'll look up. I looked at Google's. Looks like 2004 was their S1. 2003, wow. 961.9 million in revenue, 105 million in net income. So they had basic EPS of 41 cents. And then at the proposed valuation at IPO, I don't know if this is true or not. Looks like it was trading like 23.9, so 24 times earnings, 24 times sales, 218 times earnings at a $23 billion market cap. So, like they were actually making money. But wasn't the funny thing for a long time? It's not that way anymore. They've leapt over Domino's, but Domino's Pizza and Google essentially came out IPO'd at the same time. And I think Domino's on a total return basis had been beating Google for a while. It was this fascinating thing. It's not the case anymore. But all right, enough with the companies that are coming public. Let's talk about Nvidia. Like, I never go back and see what we predicted. Who knows what we even said? But I think I said I would be selling the straddle because I didn't think it was going to move.
Oh, and I said I would buy 100 from you, I think, and you sold them to me. Not really, but yeah, I mean, we were at one point today, and by I mean unchanged from yesterday's close, which means, this market traded pretty much around where it was trading yesterday. We closed at yesterday's low, pretty much. So
that means the market itself on the stock price got it to where it needed to be before earnings. Like it actually it ran up into earnings, and that was the striking price per se. That's where the buyers and sellers were based upon the expected earnings. Okay. The options market overpriced potential move X or after earnings. But let me just give you some numbers here. Q1 fiscal 27 highlights. Okay, so this is their 27 fiscal year. Let me see if this is, so 81.6 billion, 85% year-over-year increase from the same quarter a year ago. Data center revenue up 92% year-over-year. And that's all AI. That's, what is that, 75.2 billion? And EPS, I don't know if it's a crush, but they beat $1.87. The consensus was $1.76. The gross margins are just under 75%. So, like, they have really, really high margins. And it's, the interesting thing about this, you've heard the blue ocean idea, when you are the only company you can basically take, you're a price taker, meaning you can price at whatever you can. You earn very high margins. Eventually, people see that you're earning high margins, and they're like, "No, we want to enter that space." The ocean's not so blue; it starts to get crowded. The margins come down as people come in. That hasn't happened because it seems like they have some moats based upon the technology. The other news that came out was they increased their dividend from a penny to 25 cents a share. So, okay. And then they announced an additional 80 billion share repurchase authorization. I mean, like if you just cover up the name and you saw 85% year over year growth, you'd say, okay, that's pretty cool. That seems like that company is doing well. So, yeah, I mean, look, it's on a price to a forward PE basis. I think it's crept up as it's coming up, but it's not like 1999 valuations on them. So, I guess the thing too, we touched on it last week, and it might have been 2 weeks ago too. They're late when they report. So we've already had AMD, we've already had Taiwan Semiconductor. Like Taiwan Semiconductor makes all their stuff. So, yeah, like.
Yeah, Yeah, no, I mean, I think that the margins thing was a huge like question coming into this. Um, the Blackwell sort of ramp up and what's sort of gone on with oil and everything. I think main concerns coming in was like, did their margins stick, right? Do they continue to post those levels that they did in the 75%? Seems to be like in line with what the margin was or the market was expecting. And also, you know, we just, mind you, we were trading at $1.95, 195 roughly a share, not $1.95. We topped at $236.54 a share on May 14th. That time frame was from May 5th to May 14th. So in a matter of 9 days, the stock rallied about 20%. Almost, not quite, but pretty close, like 18. That's a strong run up into earnings. And then we've sort of just cooled off the past 5 trading sessions here. Floated down. We're sitting 5 points above the 20-day moving average. The 20, 50, 100, and 200 have all sort of corrected and are trading nice and evenly of above each other in sync. Yeah, I think you nailed it when you said like the market seemed to be like happy with where this was going into it. Park it right here, and we're just floating now.
It took, if you look at, so the S&P 500, who is this? Charlie Bolello posted this on Twitter. Last 10 years, S&P 500, 15% annualized return. The Q's, 22% annualized return. And the SOX index, plus 34% annualized return. Like, last 10 years have been really good. And the last 10 years, I mean, at this point, it spans what? That's, I was going to say 1996. That's way back. 2016 through 2026. Like, that's a lot. I remember when I had Nick Majuli on, who wrote the Wealth Ladder. I can link to that episode if I remember to do it. But we had talked about, I don't know if you listen, I know you listened to the episode. Back at the end of 2019, there's a lot of end of decade stuff. And at the time, I think it was Goldman Sachs, Vanguard. There's all these people put out like over the next decade, the expected return. And they did it based upon, I think somewhat, forward valuations. They look at that. I think they also look at what the market did prior. But I believe a lot of times it's priced to forward PE. And then there's that scatter plot and he had put out a great piece where if the market only doubled over the next 10 years, so that's, 7.2% a year ish. I know the actual math is different, but that's the general rule. If the market only doubled, it would have been an outlier to the downside. And I think Nick and I's podcast that we did, I think that was at the end of September of last year. And when we did the math live on the air, the market had already doubled. And that was through, 2020 through September of 2025. It's kind of a good reminder that nobody knows anything. And if you try and make predictions on this stuff, it's just a fool's errand.
Well,
and it's like markets go up over time. They go down too. I mean, I remember living through the lost decade, but expectations coming into the 2020s was really low. It's been pretty good.
It's funny because you see some models hold up longer than others, but I think there's something to be said about the fact that markets change, times change, things change, and because of that, history often rhymes, but doesn't necessarily repeat 100% of the time. And you asked, I think last week, I think you brought up like, can this market keep going up if yields were to keep going higher? And I just pulled up a chart of the 10-year looking 5 years back, right? And like, we're at a pretty big level here. In terms of, this is the recent top, and 2025 at the start of the year, we were pretty much right here. We sort of messed around here in 2023 and 2024. I think the overall peak of the past 5 years was 4.92. And so I don't know.
I think it's okay. I'm a contrarian on this. And the reason why I'm a contrarian is I remember the 90s and the markets went up with rates that on average probably were over 5%. I mean, most of the 90s was over 5%. I remember in the Asian contagion in 98, I think the 10-year was below 5, and then maybe right, towards the end, but it was above 5. Like it's healthy for an investor to put money to work, to give someone money for 10 years, although it's, a quote unquote safe investment unless the US government defaults on its payments. Like you should get paid for that. And if inflation is running, whatever the year over year is right now, it's in the 3s again, you should get above that. So I don't think people make a very big deal about the rates going higher. It's just so many people who haven't lived through higher rates, they're so anchored to the 2010s when there were no rates. And then obviously early 2020. Like I don't know. I don't think it's as big of a deal. Well, I really don't. Like you should get paid something on your money. Well, mortgage rates is a different thing. And yeah, the 10-year and the mortgage rate is linked. So yeah, maybe that's something.
But at the same time, you're seeing a steepening of the curve in the right direction. It's not like the curve is inverting where the front end's jacked up and the back end's dropping, and that's, again, as I was always taught, at least on like my general finance courses, that's what you want to see from the yield curve is you want to see the back end. You're going to get some, yield for your time actually. And on the front end, it should be a little bit lower than that. You shouldn't be getting the same 1 month out that you should, 10 years out or 3 months out. Yeah.
Sam Rowe had put something out. He does a Substack, but he put something out. And it's not the level of yields, it's the rate of change on yields. And I think his point, I don't have it handy because I remember he did a scatter plot and looked at, when rates really move, what does the market generally do? And that I think is really the problem. If rates were to really move up, I mean, if they really move down, that'd be cool too. But why? Why are rates moving down? Is there a problem? Be careful what you wish for. But you look, I mean, today we're 457. In October of 2022, we were a little above 4. I mean, sure, in May of 23, we were 3.5. But it's not like the 10-year yield has gone from, like it did, we know what it did. I mean, it went from 55 basis points up to 4 or 5. Like that's not healthy. So if we meander here or we roll higher, yeah. And by the way, you should get paid more for going out 30 years than 10 years and 5 years. It's just the way it should work. Like it's not healthy when the short end of the curve is the highest thing you can get because that's the risk-free standpoint. So right. I don't know. We'll see what happens there. The other thing I thought I'd mention too, when you look at, I had it here. I can't find it now. That's all right. It will come to me at some point. It must not have been important. So look, we're through earnings now, through the gut of it. Nvidia was really the last one. Is it actually? I'm trying to think if there's anybody else coming up. Shane, do you know? I'd have to look at that.
Nothing.
But,
I mean, look, we always say it's like Nvidia is the tail end. There are definitely still some companies reporting in the next week or two that are of, relevance. But at the same time, it seems like we're going to continue with this trend, right, of Nvidia taking the brunt of the back end.
Broadcom's the one I always forget about, just because they changed the name to AVGO. And
right. I was wondering, they're coming up in what, 2 weeks, 3 weeks?
Yeah, it's like the silent Mag 7 or the Mag 10. Nobody really. Let me look at the earnings date for that. I should have that. June 3rd. Yeah. So there's them. But it's so funny. I mean, no one even talks about them. And they're kind of a big deal. They're in the top 10 right now, right?
I believe so. And they're just, again, kind of like you said, they've been quiet. They changed the ticker. So some people probably, this company is, how long have they been public? I'm just looking back.
They go back to
they've been public
90s.
Since, yeah.
Broadcom was public in the 90s, I think, wasn't it?
A very long time. Yeah, I'm seeing here.
I feel like that's a late 90s, early 2000s company. I feel like it's...
I'm seeing back in 2009. Now, that might have been a spinoff or something of that nature. But I mean, it's been around for a while. But yeah, this has just been a name that's sort of, I think, another beneficent of the picks and shovels, right? In the AI trade. And
by the way, the initial Broadcom, April 17th, 1998.
Okay, yeah, something's wrong with my system.
No, I don't think there's anything wrong. I think there was that acquisition. What was it? Avago. What did they do? They take over, or they bought Broadcom. But the story is they negotiated the deal, but then they didn't negotiate Broadcom's ticker. So even though it's Broadcom, it's AVGO is the symbol. So there you go. Yeah, it's kind of a big deal. Like everyone forgets them. And then, so, all right. We talked, really the only thing the market, obviously we're watching the markets and everything. But the SpaceX thing is big. And I think the retail interest in this is going to be huge. So,
yeah. So I think it's safe to say, we've got a window now till next month's OPEX week. That'll be June 15th through 19th. I believe the 17th, we've got a really big meeting. It's someone's first FOMC. So you've got a little under a month here before Warsh's first FOMC, and that's conveniently same week as OPEX. I'm sure we'll be very busy. But I wonder, other than AVGO, is that really, Derek, all that the market's sort of looking at, as long as everything stays calm elsewhere?
Oh, the market's always worried about something.
It's got to find something to fixate on now, right?
Well, like I said, if this was easy, everybody would do it. It's the thing that you don't know is going to be the problem. That's the problem. That's really the thing. So the obvious things that mattered in April don't matter anymore. Right. And there's something else that will matter, and it matters what it matters. And when it doesn't matter. So, it's until the analysts lower their estimates, if they do, or continue to hire. But so far, analyst estimates have been rising. And we've talked about this ad nauseum on multiple times. You look at a chart of the market, you look at a chart of the EPS estimates over time, and they kind of trace each other. If earnings estimates are going up, generally markets are following to some degree, plus or minus some standard deviations around it. So, all right, that's all we had today. Any recommendations, Shane?
We've been very busy the past 2 weeks, and so when I've been off of work and just hanging out with the family, we
doing equations and linear math, Brownian and motion stuff, chaos math, that type of stuff.
Yeah, absolutely.
Understood.
My son's a big quantum physics guy.
Okay.
That's
That involves like building blocks and stuff, right?
Exactly.
Yep.
And then
that's the precursor. That's right. Sounds like an engineer in training. I started watching finally the 50th season of Survivor. I always wait till it's basically done. It might even be done, so don't tell me anything. I started watching it because I like to just, rip through some episodes. It's like really good. The people they brought back, because they're all returning players, so people that it's like really good, and they have a bunch of twists that the fans voted for. I didn't even know you could do this, but not like I would have done it if I could. So It's like really good. So if you haven't watched Survivor season yet, and a lot of people are like, yeah, I've already watched the finale. I know who wins. So nobody tell me what happened. I'm still going through that. All right. We did it. We got through the week, and we'll come back next week and see everything we got wrong and even some things we got right. Public service announcement. If you're thinking about SpaceX IPO, buying it post-IPO, looking at it pre-IPO, you got your chance. You can go download the S-1 and just understand that, some of these work, some of these don't. And, just give it some consider. That's my public service announcement on IPOs. Got to remember the 1990s. And the things that people did in the 90s, I'm talking taking their entire account, going on margin. I don't even think you can buy an IPO on margin anymore. I don't know that for sure, but I remember some brokerage firms stopped doing it. And Shane, I'm telling you, like, people would put all their money in an IPO and on margin. So now they're leveraged and they buy it at a price. At the end of the day, it's down like 30% lower. They're getting margin called, or worse. It's down 50% from the IPO price and their account goes to zero. I saw it time and time again. I'm not saying that's going to happen this time. Things are different now, but I remember the 90s. Like, it was crazy. And, I think at one point brokerage firms stopped letting people do it on margin. So anyway, that's my public service announcement. We'll see everyone next week.